All right, good evening, everyone, and thank you very much for joining me today, and welcome to this first ever episode of my new weekly series where I will be taking one specific currency pair from the forex or foreign exchange market and provide you guys the outlook, my personal opinion on where I believe their price will go within the next hours, within the next days, or even weeks ahead in the market. Again, for that specific one currency pair that I will be analyzing at the time. So before I jump straight into the charts and show you guys the technical analysis side of it, I would like to say that I am not an expert by any means. In fact, there is a long way to go before I can even claim to know the 1% that there is to know about this beautiful world of chart analysis, forex, and the world of financial independence as a whole. So take everything that I say with a pinch of salt, and I'm more than happy to be challenged on any point that I state, because this is one of the main reasons why I've decided to initiate this process, is to share my passion, gather clarity, gather knowledge, gather experience, and learn as I go along over the course of the following weeks and years to come. Perfect. So for the first ever episode, I would like to start with the Aussie dollar, so the Australian against the American dollar. So by looking at the weekly chart, and by weekly chart I mean that each candlestick, so this will be one candlestick, this will be another candlestick, this will be another candlestick, and so on and so forth. That represents 1 week of price action within that currency pair. So as you can imagine, if 1 week represents one tiny little candlestick, we can imagine how far back we can go to analyze price. Imagine 2003 and so on, even 2002. So we can see that there is a clear picture of how price has behaved with regards to the Aussie against the American dollar. However, we're not too worried about what's happened 10, 20 years ago because of the fact that that will not be relevant. That's moved on. Price patterns behave and they evolve and they change over time. So what we're interested in is pretty much everything from 2 years back up until now. So about 2017, 2018, this is where we really start dissecting how prices behaved, if there's any sort of specific price pattern that this specific currency pair shows on a regular basis, and if there's an opportunity to capitalize on that. Okay, so we can see that from 2013, there's been a massive sell-off of price, starting from the 1.05 levels down to the 0.6869 roughly level that we are currently at. So we can see that there's been this massive descending channel, and by descending I mean that the degree is going downwards, as you can see. It doesn't have to be parallel, it doesn't have to be specific. It's more to give you guys an idea of how price has been behaving and what the overall trend or the overall direction has been going towards. Right, so if we go down to the daily chart, we can see with more clarity that since 2013 there's been this massive sell-off, at which point price has met this trend line and started to consolidate. By consolidate, I mean that price has been moving impulsively since 2013, correctively, like that, forming these things here, to then reach another level whereby there would be that big of an impulse that the impulsive movement will resume, will restart again until it finds another level where the buyers will come in and continue to sort of outwin the sellers and push the price back and back and back towards higher levels. So we can see at the moment there's been this huge ascending corrective channel whereby from January 2016 to April 2018, Aussie dollar has been correctively moving towards the upside up until reaching this level here. Here you can see some notes, don't mind them too much. I've written here entry short, third touch of ascending channel, of this big ascending channel, plus met weekly trend line. So the weekly trend line would be the trend line, so this black sort of ray that I've drawn by looking at the weekly time frame. Risk entry. This would be a type of entry where we are risking 1% of capital and we are looking to place a position from the top of the structure with a stop loss of about maybe 250 pips. And by looking at that, we'll be looking to capitalize up until this with a 47 risk to reward ratio. That's a bit too ambitious, is a bit too risky, because we don't know what the situation may end up being within the next couple of days, and therefore we need to analyze the smaller time frames in order to gain some more clarity. Okay, well, bear with me. So from 2013, we've managed to get down to these sort of levels. From 2016 to 18, corrective nature, and then back again to this sort of region of 0.68 for the Aussie dollar. So we can see here that recently from September 2019 up until now, we can see that there's been this ascending channel of a corrective style nature, whereby price is slowly creeping up, and I was expecting the first, second, and third touch to be taking place here before I could have sold this currency pair in order to capitalize on the descending nature. However, that did not take place, and what's happened there is that the pattern within the pattern, so as you can see, this is a pattern, ascending channel within the big ascending channel, within the bigger descending channel from the weekly time frame. We can see that the price has evolved into a different pattern. So 1, 2, 3 is no longer valid. Now we have a new 1, 2, 3. In fact, after the third touch, we can see that the sellers came in, they pushed price down, and this is why I've chosen Aussie dollar for this week, because it presents a clear picture of where price is likely to go over the next couple of days ahead in the market. So it's broken the structure, as you can see, 1, 2, 3. The third touch has been violated, and just a quick disclaimer: price always moves in this sort of direction, like I've showed you earlier. Okay, so what does this mean? It means that once it reaches an important level here, it will then be impulsively going down in order to reach further level down there. So we've got, can you see, this would be this side here, this side would be this side here, and then continuing down on an impulsive nature to then repeat itself, to then hopefully continue down, and then continue down, and then continue down, before we reach a very, very important level, at which point the buys will come in and kick the price up. By big buys, I mean institutions, pension funds, hedge funds, big brokers, big banks. So if you and I were to praise a £100 or even £1,000 trade, that would definitely not be enough to move the market, because there would be millions and millions injected into this sort of market on a daily basis, or even every hour, actually. So we're looking at this, we're looking at this structure and understand that perhaps there is a possibility of to the downside. We can see this pattern here with more clarity on the 1 hour, meaning that each candlestick represents 1 hour of price action within that specific currency pair. And we can see what I showed you just a few seconds back. So impulse, correction, impulse, correction. What's to be expected here? Most likely another impulse to the downside. We then will be testing a very important level that will be given from this bigger ascending channel. So 1, 2, 3. So one or two things could happen here, obviously, you would say. The first thing is to react impulsively and therefore retest these levels here. And why not that level there? That, I remind you, is the weekly trend line coming from a descending fashion. However, the second thing could also take place. So we could see that price will then continue down with a similar sort of trend, continuation, and then again. So if that price area is broken, we will most likely see that price will then reach this orange ray that I've put here, because of the fact that we know that when price reaches an area and breaks it, there is a 90% probability that the price will then retest the same levels of where it started at before initiating this, in this case, ascending channel. The opposite would also be true. In fact, if we had a descending channel, price then breaks here, breaks this level, there is a 90% probability that this level here is retested. Does that make sense? Okay, so we've got some clues. So we've got the first, second, and third touch, not quite, but within a different type of pattern within the same area, so we can still accept it as a hint to the downside. Look at the strong momentum. Momentum has been strong, volatility has been present, but remember, price always follows this nature. So down, horizontal, down, horizontal, down, horizontal, and so on and so forth. So I will be looking quite closely at this level over the next couple of days or even weeks ahead. My personal outlook is that we will be reaching this area here, this area here, by testing the orange line, but obviously there is no guarantee. What could we do if that did not take place? Okay, so we need to be prepared for both scenarios. If that were not to take place, then if in fact price could retest this level, we will be looking at this area here. If that gets broken again, then we will place a long position, and by long position I mean we will be buying into the market, saying that in our opinion the price will increase in value over time, and testing this big weekly time frame. Okay, so first case scenario, there will be a short position, which is the opposite of a call or long position, whereby we can place a 250 stop loss roughly down to the downside, with a risk reward ratio of nearly 6%, meaning if you risked 1% equal to 250 pips, you'd be making 6 times as much as you've risked of your capital. Okay, so the opposite would be if you are betting on the long position on 722, for example, stop loss with a 3.21, you'll be making 2,320 pips, which, depending on your monetary amount that you would have input into your brokerage account, that would result in a monetary amount, which would equal in this case 4.76% of the initial capital that you've decided to invest. Okay, so I would like to wrap this up very quickly by saying that, like I've said initially, there is no guarantee that this will take place. It's just pure chart analysis based on my little knowledge of just a couple of months of studying and researching and backtesting and forecasting data. I will look at this price quite intensively, because I will be ready to place a short position here, like I've said previously, down to the downside. And you could say, okay, what's going to happen then if it reaches this level? Well, chances are that if we look at the daily, we could also continue to the downside. Don't forget that the bigger trend is still very descending, is still very negative, meaning it could continue down to perhaps this level here, testing that trend line, or even this level here, testing the weekly trend line. So it's all about trial and error and waiting to receive the perfect well, not the perfect confirmation, but as much of a clear sign from the market of what could happen within the next couple of days, and being able to then capitalize on that based upon your research. Okay, so thank you very much for joining me, for taking your time of the day to look at this few minutes chart analysis video. Like I've said, this will be a weekly series, so every week I will be sure to provide you guys with another. I will be selecting another currency pair from the same forex market. We're not looking at equities, so stocks or bonds here, because they belong to a much different type of analysis, so more fundamental. So you would have to look at the balance sheets and income statements and so on and so forth. So there's a much more complex sort of behavior or analysis that goes on before looking at stocks. So we're just looking at forex. The currency market is extremely liquid, extremely volatile, and we'll be looking to capitalize on that. All right, thank you very much for your time, and until the next one. Cheers.